Before we get started, I want to welcome all the new people. Anybody on here never been on before, welcome. And welcome all the people who are already in the group and are regulars on the call. I think we on training 5 or 6 now. And I think this is matter of fact, Barbara, this is about charts, right?
Yes, we're into charts now. This is lesson 6. And it's
Okay.
on time frames and 50% retracement tonight.
Yeah, we want to get into some charts tonight, and hope everybody pay close attention because we do a lot on the charts. I make all my decisions from the charts, being a technical trader. So you want to learn and understand the charts. So the more you look at them, the more it makes sense to you. So let's get into another week of training, and I'm gonna turn it over to you, Barbara, if you're ready to keep us in compliance.
Yes, sir. Here's our disclaimer for Futures and Commodities one-on-one trading group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
Absolutely.
Barbara, I might recommend that you turn your mic down just a little bit.
Turn it down.
Turn it down yet.
Okay. Thank you.
Okay, Barbara, can we stay right here and ask you to cover the quizzes for us?
Yes, you can. Let's see. First quiz. When the market is trading in a downtrend, this is a clear sign that everyone in the market is losing their money. A, false. B, true. C, not sure. When the market is trading in a downtrend, this is a clear sign that everyone in the market is losing their money. A, false. B, true. C, not sure.
False.
I'm about to say false.
Somebody said false. Is false correct?
You can make money when the market is in a downtrend.
Mm.
Money up and down.
What you say, Stephen?
You can make money whether the market is going up or down.
Oh, even when it's going down too.
Yes, sir.
Yes, sir.
Okay. Anybody disagree with this? With Pam and Stephen?
I agree.
Queen say she agree. What about you, Kyle? You think they know what they talking about?
Yep.
Even if the market going down, trade down now. That's what we talking about. It's going down. We still can make money, Kyle.
Yeah. If yeah. If yes.
What? Okay. Okay. Well, let's check with Barbara and see if y'all right. What's the answer, Barbara? They right or wrong?
Well, they're right. You can make money when the market is going down. It's called going short. Shorten the market. So just as long as you're going in the direction that price is moving in, that's when you make money.
So the Bears do win sometimes.
The,
That's when the Bears win.
the Bears
Okay.
win sometime.
Good deal. All right. Good job.
All right. Next one is, how is a downtrend established? How is a downtrend established?
Mm.
Low
Lower
highs, low lows.
upper lows.
Oh, somebody
Mm.
been paying attention. Somebody been listening.
God, I thought you said you don't have that book.
I don't.
You must be taking
What?
good notes.
What you
Yes.
did? What you over there Googling?
I'm taking notes.
Oh,
Well, you taking very
okay.
good notes.
Okay.
So
Well,
what was the
time.
question again?
How is a downtrend established?
Okay.
Yeah, they say you just the market start trading higher, you make higher highs and higher lows. And that what y'all said?
No, I
Nico
said
was.
Said
a lower low, lower highs and lower
lower
lows.
highs and lower lows.
Johnny says a series of.
That's right. That's right. Lower resistance and lower support. Lower highs and lower lows. This is how we establish. And nobody didn't Google it. They got this from their notes, bro.
Good.
Very good. All right. I think we only had two.
Yes, we only had two.
Okay.
All right. Tonight's lesson. This is lesson 6 on time frames and the 50% retracement. This lesson can be found in lesson 3 in the manual. And we want to encourage you guys come to the retreat in April 30th through May the 2nd. You want to be there to really learn how to get started, learn more about the marketplace, hear things that you've never heard before, and get a strategy revealed to you that's never been revealed on the call. And then you want to get ideas from other people. This is a time to ask the mentors like Mr. Johnny, Eric, Delvin questions that you can't ask on this call just because the time doesn't permit. So they tend to give knowledge that they don't give on Sunday nights, that you just can't get if you're not in person. So we want you to come. We do have a payment plan through a firm. The tickets are $199 and they are for sale currently. It starts April 30th at 5 p.m. That's our meet and greet, and it goes till Saturday evening. So we want you guys there, and we have a special industry guest that's coming this time that's never been at the retreat. And this is a really huge surprise that we have. So we want you guys to be there this year for our 2026 Travel and Trade Retreat. And so we have some ones that's been coming. They're coming back again this year. We've had people come from Trinidad, Costa Rica, all over the world. So, and they're coming to return for another year. So we want you guys there. All right, Delvin talked a lot about the book before we got started, but I want to encourage you again. This is what we teach out of the information Mr. Johnny give to you guys, Delvin give to you. They get it out of this manual. This manual represents over 30 years of knowledge and experience that Delvin has learned. And from the rules, the foundation, to the technical, the charts, it's in here. And this is what we teach by. It's always good to have the textbook. We want you to get it so that you can have something to rely back on during the week. When you're learning the market and wanting to know, you got a question, you probably can find it in this manual. And if you've purchased it, if you're going to, don't forget to leave us a review. It helps us with our sales, and it helps us, get our name out there for this book, that as many people can purchase it as possible. So we appreciate everyone that's already purchase this manual. Thank you so much.
Absolutely.
And next, before we go any further, we have to give special thanks to the CME Group. This is the largest exchange in the world. We use a lot of their education, their videos, and so we give special thanks to them for allowing us to educate you guys off of their material. And barchart.com, that's our go-to platform. If you haven't opened up a free barchart.com account, please do so. It's free. It only takes about a minute to get started and open up an account. They're the leading provider of real-time commodities data and stock data as well in the industry. If you've been on any other financial channels, you see the charts and all the numbers and stuff going across the screen. They're using barchart.com. So we want you guys to get started with them. All right. Over to you, Mr. Johnny Delvin.
All right, Johnny. You want to get us going in your normal fashion, or you want me to?
Well, let's understand the time frames. Charts that we're going to look at are weekly or monthly, show overall market direction within time frames. And it's funny that the time frames tend to mirror each other. So this is the SOFA. You'll notice that the first portion of this, let me get my annotator out. This section right here was made up of an uptrend, a downtrend, up, and back down, followed by a sideways trough. That sideways trough is about the same time as this mess. Okay. And we don't know, but it kind of looks like this portion is going to be maybe the same. We don't know for sure, but we do know that they often mirror themselves. Okay. In time. All right. Next. All right. So now we've got different time frames for trends. There's a current trend. We have different terminology, but this is I can't tell what. Is this a monthly chart? Let me put my glasses back on.
6 month.
6-month chart. All right. So you're dealing in a 6-month chart here, but the time frame that we're looking at is the current time frame, 1 or 2 weeks. Okay. So we know what it's done in the past, and we know what it's done in the last 2 weeks, which, folks, I want to show you something. So if this is a trend line, okay, an uptrend, even though it broke out at one point in time, it still came back to the same long-term trend. Okay. So that's why we look at a longer time frame to see what overall, what has the market done? Okay. Now, when we look at this though, like I said, it broke out, but then it came back down. And you're gonna, we'll show you something here later, but this move here had a 50% retracement going here. It's amazing. This little downtrend had a 50% retracement, and then it started back up again. So, when we talk about 50% retracement here in a minute, it can be applied almost to any chart. Okay. So, but I want what we're looking at here, just this chart illustrates what the current trend is, no matter what it did over the last 6 months. So next chart. An intermediate trend is 3 to 6 weeks, or 3 weeks to 6 months, sorry. So when we looked at the current trend, and then we look at an intermediate trend, is this thing going, is this current trend moving over a 3 to 6 month period? Go back one. So remember what I just got through saying about this current trend here that's in the blue box? The intermediate or long term, right, has been up. Even though this intermediate trend was down and then goes to a sideways channel. Okay. Okay, go back next, or go to the next one. All right, so we can identify trends here. A downtrend. We had a big, sharp up go on this, and then we went sideways. This chart's all over the place. Okay. So the question that I would ask in this time frame, is it up, is it down, or is it sideways? Now it's had several moves up and down. Mm-hmm. But over this time frame, it's still up. Mm-hmm. Okay. Mm-hmm. All right, 6 months and longer. So again, here we go. So we had a long uptrend followed by a downtrend, which I can tell you right now, did a 50% retracement, and then changed back direction again, going towards the uptrend. Right? Mm-hmm. Now you can just see this, and we're going to show you, how we go back and calculate it. But for me, it's pretty easy to see. All right. So this is a major trend, and this is 6 months or longer. That's the time frame. Okay. All right. Let me turn it over to Back to you, Delvin, or if you want to give it to Barbara. I think Barbara's
Okay.
good at this.
She is. Just real quick, Johnny, before we jump into 50% retracement, that was a great job, man. Everybody, I just want to point out, make sure you understand, like Johnny just made mention of, there are different time frames with the trends, and Johnny just showed you, that, the difference between the current trend, a week or two, and then a minor trend. And I, here's what I really want to just say before we move on. When you hear someone say a reference to a minor trend or an intermediate trend or a short trend, these are these three are basically all referring to the same time frame. Some people just use different terminology, but a minor trend can be sometimes called an intermediate trend. Just different words that's being used, but they talk about the same time frame. So awesome, Johnny. And then he covered the major trend, which is a much longer time frame. But when we get into talking about charts, you may have heard us say something called 50% retracement. And when it comes to the charts, the very first thing I look at when I see a chart is the 50% retracement level. I want to know where the 50% retracement level is on this chart because I want to see if this is even going to be something that's worth my time or even has an opportunity for me to look at a trade. So the first thing I want to know, where's the 50% retracement on this chart? And you may be saying, what is a 50% retracement? And 50% retracement is very, very important because we've had times where people say, what's the point of knowing 50% retracement? It's very, very important to know 50% retracement when you're using charts. And Barbara, did you want to cover this or you wanted me to?
I could cover it. So the 50% retracement is the reason why you're in the market. Um, any chart you go on, you have a target, you have a goal you want to reach. You have a reason for looking at that chart. You have an expectation as the trader. Either you're going bullish or you're going bearish, but you wanted it to reach a destination for you. So this is the 50% retracement, better known as your profit or your target, because it has to, any direction it goes in, it has to hit somewhere for you. So this is the purpose of you being in the market, to see if it goes to your target of where you are speculating that price would go to. So a trend that breaks out and retraces back 50% of the move it just made, that's known as a 50% retracement. And Mr. Johnny just pointed that out to us on the chart. Like let me see which one he just did. So take this one, it's traveling in an uptrend. But at some point it reached the highest point on the chart. But then it did what? It retraced back down. And it came back down 50% of the move it had just made. It made its 50% retracement or target. So this would have been your target. So it made it retrace back down. It traveled up and it came back down and made its 50% of the move it had just made. So this is why you're in the market, to see if it's going to hit your 50% retracement. This is the first thing you do, like Delvin said, when you come to any chart, because you don't want to spend time looking at everything else on this chart and you're expecting to get into this trade and it's already made its 50%. That means you're going to have to wait to get in that market. so that it can hit a new 50%. The market makes both small and large retracements all throughout the time frame. It does it in the 1 month, the 2 month, the 3 month, the 6 month, the 1 year, the 5 year. It does that. And one reason why we go over all the time frames is for a key significant thing, because every time frame makes a 50% retracement. And a lot of times, if we see, sometimes the 50% retracement could be almost the same number on the 1 month that it is on the 6 month, that it is on the 1 year. So that's a strong indicator for you, that's the trader, that okay, this is going to hit my target. So all of that is you studying the chart. That's why you look at each time frame to see the market behaviors between the time frames. And this is normal market behavior. It makes 50% all the time, every time frame, every market. So
Hey, brother, if you don't mind me jumping in and ask you a question, can you go back to the chart you just pulled up
yes.
when you showed the 50%
Hmm.
retracement? Now, the question I wanted to ask, after that 50% retracement, what did the market do then?
It went back up and made another 50%.
50%. Exactly.
It did it, and then it come back up. It changed directions and retraced it 50% of the move it just made. It made a new 50% retracement. So it say if you missed it and it would have just hit this, you would have been the person waiting for it to make a new 1, 2, and 3 bottom formation to get back in above the number 2 and ride it back up to make its new 50% retracement. So even if you miss it, you just wait to get back in. So it's not like, or you go to another market, and trade another market. So, it's so many markets to trade, but that's exactly what you do.
Thank you, awesome.
Okay, so we have a formula that we go by, and then bar chart has a tool called the 50% retracement. You can just use that tool and it'll give you the actual 50% retracement without you using a formula. But Delvin does go by a formula. You take the highest price on the chart, you add it to the lowest price on the chart, and you divide those numbers by 2, and that gives you your 50% retracement. So this is the manual way to do it, by using the formula. Highest price on the chart, lowest price divided by 2 equals a 50% retracement. And bar chart makes it very easy for you by putting that half moon above the number 1 at the highest price and underneath the number 1 at the lowest price. So if you ever have trouble trying to figure out, you just look for that little half moon on the chart, on bar chart, and it'll give it to you. So, like I said, the 50% is the target, the reason why we're in the market, which is your profit as well. So you want to, look for that first. And so now we can go over the bar chart, and Mr. Johnny or Devin, where would you like to go to? Which market?
Ah, well,
Livestock.
Livestock it is.
That'll give you a good one right now.
yeah, Friday was brutal. Live and feeder.
All right.
Yep.
Then, if you don't mind, man, I know this is a little bit like to the left, but just think about it. I think you might be the person to ask, not me, but I was in a butter trade, and as I was trading butter, I kept an eye on cattle because the butter market was really being affected by what was going on with cattle. Um, those two markets have a connection, the butter and the cattle.
Yes and no. Um, a lot of that has to do with see we produce more milk and dairy products than are consumed. And we've got big time competition from the Canadians that produce a lot of milk. So, matter of fact, one of the issues that's in the dairy business, whenever a cow comes into season, it's important to breed it. That way it's keeping into milk. Okay. Now, the dairy cow is going to either have a male or a female. The female is going to be, held uh, for milk production, as a replacement. The steer is going to go into the meat market. Now, there's an overabundance of cattle in the dairy. So what they're doing is they're crossbreeding the dairy cow with the beef cow. Okay. So that it reduces the size of the herd. But the butter really deals with the production of milk and milk products and the abundance thereof, supply and demand. Okay.
Gotcha.
But a lot
All
of the
right.
things that you're hearing is the pressure to get the dairy cattle out of the market to reduce the milk production, which the only place for them to go is the meat market. So that's where it impacts the price of cattle as it relates to the price of butter. Does that make
Gotcha,
sense?
man. Yeah, man. Appreciate that breakdown because I was long butter, man. Friday when cattle start selling off, butter starts selling off as well. I got stopped out. But yeah, thanks, man. I appreciate that.
Okay, so um, this is kind of the chart we're looking at. So in order to figure out what this is a 6 month chart. Okay. All right. So on a 6 month chart, we're going to find the highest price on the chart. And that is by that little half moon up there at the top. Okay. And then we're going to find the lowest part on the chart. Okay. Now, there's a tool here that we can use to find those two numbers. Okay. It's called retracement. And if you put it on top, bring it down to the bottom. So we know that the high was 250.925. The low was 205.3382. If you add those two together and divide it by 2, you're going to come up with 238.462. Okay. And that would be your 50% retracement. So I want you to look at this chart, which is kind of an interesting chart. So we had a 1, 2, 3 top. Okay. Okay. And it took off to the bottom. Okay. Now we're on a downtrend. A couple other things you're going to see. There's some gaps. We're going to talk about gaps as well. All right. Now it went all the way down, and then we had a 1, 2, 3 bottom. Okay. And then we came up to the 50% retracement. And guess what? What happened at the 50% retracement? It hit a ceiling. All right? Or hit resistance. Okay? And then we started on a sideways channel. Okay? And then it broke out again to the top and added on an intermediate trend up, and it's failed. It's going back down again. All right. Now, so a couple of things that we know about a 50% retracement. Number one, that's our goal for the profit. And that's our primary goal. And then we're going to let it run as long as it'll run. Because oftentimes, when it hits a 50% retracement, it will continue on in the direction. But in this case, it went sideways for a while. Depending on your stops, whether or not you got stopped out of this or not. You know. But let me tell you what it did do. It did cover that. It did cover that gap, didn't it?
It did. Hey,
Okay.
Johnny, let me ask you, are you all
Yeah.
right with opening it up for Q&A right here? If we just go
Absolutely.
ahead, let's go ahead and open up for Q&A, because as we covering this chart, I want you guys to ask you questions while we going over the chart instead of waiting till we get through. If you got any questions about this, let's let's cover it. But it is a good chart to go over, Johnny.
Mhm.
Anybody got any questions about what Johnny just went over on this chart?
No, no questions at all.
Everybody's clear about it. If you would have got into this trade and traded that, y'all told me at the beginning of the call that we can make money when the market going down. We have a 1, 2, 3 top, meaning that we see the market making the top, and then the market got into a downtrend. Everybody clear on the fact that if you would have entered that trade, that 50% retracement line, that would have been your target if you would have gotten into that trade. Everybody clear on that?
Yes.
Same thing with the 1, 2, 3 bottom. Everybody clear on that one. If you would have seen that 1, 2, 3 and entered the market above that number 2,
Yes.
that 50% retracement would have been your target where you would have been trading the market to. Everybody clear?
Yes.
Okay. Look like they clear, Johnny.
Okay. All right, you want to
Barbara, you,
go to
you,
another chart if you want?
yeah, I know we want to make sure we talk about a micro or a mini. Is that something you wanted to cover too, Barbara, or what?
Sure. Which market would you like to go to?
I can't remember what we covered last time. Um, but I think we went into
No, I think we did natural gas for a minute.
natural
Yeah.
gas.
Okay. Take a look at.
So we want to show you guys this so you can see the opportunities in the market are not just for those who have large accounts, but for those who have smaller accounts too. There's still an opportunity for you to get into the market. But again, we want to start paper trading, and but we want you to know that there's margins in the market for everyone. So, which one did you pull up, Barbara? Did you get?
I'm gonna do Dow futures micro.
Okay. So for the Dow futures, there's a future contract, and then there's a smaller contract that we can take advantage of. To say we look at the margin for the future contract, and it's more than what we can, uh, handle for outside of our account. That's what's called a micro contract. Much smaller contract. Same Dow Jones futures, just a smaller contract. And the chart should mirror, the, the micro chart should mirror what the futures contract looks like. So, want to do another 50% retracement example or no? Everybody say they clear on it. But what you think, Barbara?
Now let's do another one.
Yeah, okay. Let's do it. Carter, you understand that the bar chart helps you identify the highest and lowest price on the chart?
Yes, I can follow that. Oops.
Okay.
Yeah.
The 50% retracement formula, you got that in your notes?
Yes, I do.
Okay.
So yeah, you
Can
take
you
the
can you
two.
walk with me on this one? Can you give me the highest and the lowest price on the chart, and then we're gonna add them together. We're gonna do it together.
Okay. All
What's the
right.
highest price?
The highest price looks like it's, well, is it above that
Can you
50?
put your cursor there? The right
Oh, okay. So it looks like it's 50, is that 50,628? 50,000,
50.68.
oh, 68. Oh, okay.
50.68. Write that down.
50.628.
You got that?
Yeah, 50.628.
And 45.726.
726. Okay.
Add them together, divide them by 2.
So, all right. So I got 96,354. And you said divided by 2.
Yes, ma'am.
8, 1. All right. So it's 48. Oh, let me see. Let me just make sure it's
Thank Pam helping you out.
oh, okay. Yeah, because I'm doing a long hand.
oh,
Old school.
oh, you didn't get your
Okay.
calculator.
I got the calculator.
I don't have, well, it's on my phone and I would, okay.
Yes.
Help her
It-
out, Pam.
Thanks,
It's
Pam.
48.177.
Okay, yeah, I had the 48.1. That's as far as I got. All right, so 48.177.
Hmm.
That's the 50% retracement.
That's the 50% retracement level.
Okay.
Okay.
The
Now,
question.
so in
Go ahead. Go
oh
ahead,
no,
John.
no, go ahead.
No, you go ahead. I want
So
to hear.
in this long trend, all right. So it's been an uptrend. Okay. It reversed course. If your goal is 48,177, how much is left in this trade to get to your goal? I'm not looking for a number.
You asking everybody or just,
Yeah, everybody.
oh, there's plenty of profit in it.
No, no, how much is left?
Oh,
If you're not in this trade,
hmm
how much is left of the 50% retracement to have a chance for profit?
looks like you went over. You uh, it depends on where you. If you're going a uptrend, uh, to me, you still passed about 40, maybe 49.250 or something like that. Is that what you're saying? I mean, it's still a continuous uptrend, honestly, because it does a sideways channel, and it just does that for only so many days, and then it continues on an uptrend all the way to 50. Yeah, I would say you can go all the way up. Correct.
What Mr. Johnny is pointing out is that if you just came to this chart, you wouldn't get in this trade. If you're, because
Oh, you're talking about
this
based on
right here,
today's date.
right, you would have, your number two is right here. So you would have missed your opportunity because it's almost at its 50%. It's right here. It got a little gap right there, but it's right here at the 50% pretty much. So you wouldn't get in this trade because you get in underneath the number two in the top formation, which would be right in this area, but it did a little sideways trough. Your number three. So if you didn't get in up here, you would have to wait basically to get in this trade because it's right there at your target.
Yeah,
I'm
so the
right. I'm
answer is not much. There's not
not
much
much.
left in
I'm
this trade.
understanding now. I'm
Because
up here. Yeah.
your next
You,
number two is right here,
right.
here, and your number three is all the way up here. So really, look how much you would be risking, you know, as a risk to go here. If you technically,
No, no. I
you know,
got you. I'm sorry. My
yeah,
misunderstanding on my
yeah.
part.
I figured, I thought you did, so that's why
Yeah,
I was trying to.
I'm looking at down down at the low end in the formation how it came up
Yeah,
one,
you was
two,
looking
three, and it
down here,
just
but that's
kind of
what Mr.
ran.
Johnny was pointing out. So that's why when you come on a chart, the first thing you have to find is your 50% to
Right.
see if it's worth you getting in the trade. So if you'd have come here and you'd have been over here putting your one, two, and three
No.
and all of
Yeah.
this, and you would have
Mm,
missed it.
correct. You're
But
right. You're 100%
yeah.
correct. Yeah. This is my
So
understanding.
that's what he was pointing out. This would be one of those charts where the market will, I'm gonna have to wait on
You're
this
right.
get
You'll
to
come to
another
it another
market, or
time.
you or you just set yourself an alert, where you think it's gonna get to where you can get in to
Right.
retrace it back, to the 50%, to a new
Mm.
50%. So that's
Yeah.
what Johnny was pointing.
Gotcha.
So on this chart, you're going to learn. Guess what we see right there, where that second red line is. There's a gap. Charts don't like gaps.
Gonna feel it. Yeah.
So when Miss Barber says, "Let's start watching this. Let's put it on our radar screen." If this thing goes down and bypasses the 50% retracement, watch for a change of direction to go back to cover that
That gap.
uh,
Yep.
gap. That's how we read the charts.
Got it. Yep.
You know, but guess what? There's all kinds of geopolitical turmoil right now. I would envision this probably going down a little bit more until whatever is resolved is resolved. And then it would probably come back and retrace. But this is an opportunity to look at. But what rule then would we be using on this trade? Starts with a P. And it's one of Joseph Haidt's favorite words.
Would that be patience, Mr. Johnson?
Be patient. Be patient. Yeah. Mm.
Is everybody clear about this? Did everybody understand that? Did this make sense to you, Kai?
Which part about the gap?
Well, not
But the
necessarily the gap. We're gonna be covering the gap.
Yeah, I have making sure that you have enough leeway before you reach the 50% retraceable.
Yeah, yeah.
Re-
The
yeah,
fact that
in order for you to be able to, if it's not enough room there, or if it's not enough space there, or not enough time, I guess you can wait until the next best chance to get in.
yeah.
yeah.
Can
So
can
just
we
know
can
that
we
when we talk about targets, we're talking about the fact that when we get into a trade, that 50% retracement level is the target you're trying to see the market trade to. Clear
Okay.
on that part, right?
Whether
That's why.
it's up or down.
up or down?
Yeah, yeah. When you get into a trade, your target will be the 50% retracement level. That's the reason we want to know where it is.
Okay.
Like Barbara said, we are looking to see, if there's going to be a opportunity to get into the trade because we don't want to risk $2,000 to make $200. Does that make sense?
Right.
Okay. What you was finna say, Johnny? My bad. I think you was saying something.
Well, I wanted to, can you move the chart back to the left? All right. We this happens on every chart. So if you could cover all from October the 20th out, and just look at from August, you had an uptrend, okay, and then you had a 50% retracement, okay. Um, you had another uptrend and a 50% retracement, right?
Mhm.
You had an uptrend and then it reversed course, right? So this would be this, uh, I need my annotator. Okay, so you had this downtrend, okay, and then it retraced 50%, but then kept going. Came down, retraced 50%, went down, retraced. So it happens over and over and over and over again. Okay. So you can take a 6-month chart. If you go, look, I like this, move it to a 3-month. Do you still like it? Move it to a 1-month. Do you still like it? You know? if it looks good to you and all the numbers are showing, then go for it. And you can do it even on a day, you know. You know, if you take and look at this, you know, you're going to see 50% retracements even here. Down 50%, down, down. But it's not always 50%. There's a 30%, there's a 50%, and a 65%, I think. So let me clear this for a second. If you take, you know, and do this 50% here, there's different, do this little retracement deal again, would you? Okay, so this is a retracement part. Okay, it says here's a 23.6, a 37, and a 50, you know. So it shows you different levels that you can look for. Okay. This is an easy tool. So that's all I wanted to kind of tell you.
All right. And again, that was a Dow Jones futures, correct, Barbara?
Yes.
Micro contract. Much smaller contract from the big one, but opportunity that allows everyone to still be able to get in the market. So I know we went over just a little bit. Before I forget, anybody that's not in our Telegram group, not a part of our community, I want to invite you to join